कैसे हो गौतम भाई? Long time.
Long time indeed. Nikunj, how are you?
All
Good to
well,
speak
all
to you.
well, all well. So nice to have you back. Um,
Yes, likewise.
we had excesses in the market, which got checked and corrected in the month of March. What should we expect now? Now that things are improving on the macro front, on the micro front, and also things have improved on the valuation front.
Yeah. So absolutely, Nikunj, we are somewhere mid-cycle in this correction. Valuations after the correction are quite reasonable, especially in large caps. And earnings is also, earnings cycle is also midway. So hopefully H2 should see some earnings pickup. So I think for a long-term investor, this is a very decent time to deploy money in equity markets, especially with a large cap orientation, I would say. And for volatility, you can also use the balance advantage kind of strategies because markets are likely to be volatile, and the volatility is largely because of the macro reasons that we were discussing just before we started this.
Okay. Everyone is saying that the momentum is broken. Small and mid cap stock, the party is over. But then when I look at flows into the market, SIP flows or flows into the small and the mid cap stocks also, no one's panicking. So can we say that the trend is broken? Can we say the sentiment has changed? Yes, prices have changed, but the commitment is still the same.
So honestly, this is a much anticipated valuation correction, A. And there's also a cyclical correction in earnings. Earnings were at an elevated level and they have been reverting. So to say that growth is disappearing, I don't think we should take that stance right now. I think we should wait and watch. There should be a cyclical recovery in growth towards H2 of FY26, especially as the monetary boost comes through, right? Monetary boost has already started coming through, be it through liquidity or interest rate cuts, which have begun. So as that cycle plays out, that will have a significant, impact, especially on discretionary consumption in H2, is what we believe.
Hi, afternoon. So everyone's wondering what the portfolio tilt is should be like. March has seen a decent rebound, but are we out of the woods? And what sectors and how much exposure should one have now?
I think from a portfolio tilt perspective, it would be a very consensus choice. I'm sure even for me, it would be financials, and that would be the lending institutions and including insurance, because valuations are most supportive in that part of the universe. And also the growth improvement when it plays through, that should benefit the earnings of these companies the most. The delta in earnings should be the highest in these kind of companies. So financials will be our number one choice in terms of asset allocation at this point.
I'm just looking at the surge in the market in last 10-15 minutes, and it's not bad actually. So Kunal, that cycle starts again. Gautam, I'm just coming right to you, but I've got a lot of viewers or traders also. They want to know क्या करने का फटाफट. SIP तो है, पर Kunal will tell us what to do next. Kunal, what would you do now? I mean, take a trade, a long trade, and assume that tomorrow you'll get a better exit because of tariff.
Yeah, so I think stock specific, there are many stocks which could probably be unaffected by this kind of a event as such. For example, the OMC stocks, you've seen IOC, BPCL, HPCL, they've been looking attractive. The insurance space, you've seen many of the stocks going into a very big breakout. NBFC pocket, there are many stocks which are heading towards a very big breakout, not just the likes of Bajaj Finance, Finserv, but even the tier 2 end or the mid cap and the NBFC pocket, which have started to look attractive. The PSU banking lot, there has been many stocks which are heading towards a 200 DMA breakout as well as an individual breakout. So I think the markets are looking out for much more wider opportunities in this phase.
Okay, wider opportunities. Well, of course, financials seems to be the top draw. There are many other sectors which are also looking attractive. Look at Tata Consumer Products. The way that's shot up today, Goldman Sachs has upgraded it to a buy. They've upped the target price also now to 1,200 from the earlier 1,040. They're saying that they're poised for a strong EPS growth over FY25 to 27, and that they expect strong recovery of tea margins with price hikes as well bundled into that. Tata Consumer now up 7.5%. Gautam, what's the sense that you're getting about FMCG? Sure enough, some of these stocks have actually rebounded from their 52-week lows. But that entire theory about the slowdown in the rural did hit them hard. Who do you think is going to emerge the winner from entire staples basket?
So FMCG, honestly, Asha, the demand recovery is still not happening. Let's be very honest about it. So it's wait and watch. Some triggers like the income tax benefits which are coming through are there. Monsoons are likely to be early days yet, but monsoons are likely to be good this year. Otherwise, the agri sector is coming out of a long drawn, post-COVID lull period. So one should hope for a more cyclical recovery in FY26. I would draw the example of two-wheelers here, where also we had seen something similar. Post-COVID, you had a long-drawn lull there also, and then suddenly there was a bit of a recovery. So something similar cannot be ruled out in FMCG. The other aspect is if you look at valuations, this is one sector which had challenging valuations for a very long time. But after a very long period of time correction, this is looking attractive. So yes, there is no visibility of growth per se right now, but this could be a very good contra idea to start biting into from a later half of FY26 perspective is the way I would approach it.
Your sense too, contra idea, or would you go by breakouts that you're having today on, say, a Tata Consumer?
No, I think there are a lot many stocks which are actually showing signs of evidence of a breakout as well as a potential turnaround. So it's a matter of time when the market gets back its zone of confidence. The underperforming sectors, and we are talking of large cap names over here, which are many of them are part of the Nifty 50 basket also. So I think the three sectors which have been underperforming, IT index of course has been a sharp underperformer, FMCG as well as auto. And I strongly sense that there are many stocks which are heading towards a breakout for themselves. You've seen Marico, for example, a stock which has corrected the least from the entire FMCG pack. That's a stock which is showing signs of strength. Tata Consumers after today's breakout, 200-day moving average breakout, as well as a very big gap breakout for Tata Consumers looks attractive for potentially another 10% on the upside. So there is bound to be a catch-up which should be playing out for many of the other names, and especially the likes of HUL, Britannia, which have been not showing any major signs of recovery. So my sense is that the entire basket should pick up from here on. Buying into the FMCG pocket is something which I would believe could be a decent trade for the next 3 to 6 months.
Okay. Meantime, look out for Bharti Airtel as well. They've expanded their Nokia partnership to enhance the 5G network. The shares, of course, are holding up today. And also remember, this has been one of those very strong and resilient stocks in the market correction as well that lasted up until March. This was one stock which actually stood ground and still holding up at 1755 odd levels. Also, Antique has picked Chalet Hotels as its top bet in the hospitality sector. For a strong Q4 is what they're positioned to post right now. Chalet Hotels holding up 2.25% as we speak right now. Let's see what IHCL as well is up to, Indian Hotels that is, and how that stock is performing currently. And then, of course, the entire pool, that comes with travel and hospitality. The best pick off the lot, Interglobe Aviation. Let's see what that stock as well is doing, given its monopoly within the aviation space. And I would be interested to see what GMR Airports as well is up to, considering the passenger traffic has only seen an uptick on a month-on-month basis. What is your own sense, Gautam, on how this entire travel boom should be capitalized in on? Should it be via some of these platform plays like an Ixigo, etc., or should it be via hotels, aviation, airports, or should it be a basket of all?
Asha, luckily this has been one huge turnaround in terms of the profit pool shaping up post-COVID. The entire travel sector, as you rightly mentioned, that would include hotels and airlines and other platform companies which are aiding them. So we are honestly not seeing any signs of slowdown. We are on the lookout for signals of a cyclical peak out here, but they have not come yet. So while we were early investors in all these companies, we stay invested. We are not very excited incremental buyers because ultimately the cycle has to set in. But when you think of a cycle in this sector, there are two angles. One is demand, which is holding up. The other is the supply side. So I don't think supply side risks are really coming into these sectors. And even other sectors which have done well, cyclical sectors which have done well post-COVID, which are driven by supply coming in, like real estate and hospitals, there we are not seeing signs of peaking out yet. But of course, we are very aware of the fact that a lot has happened. Huge delta has happened in terms of market cap and in terms of profit. So it's not like we are very, very excited in terms of deploying fresh capital, but remaining invested in many of these keeping asset-heavy cyclical models that we are talking.
This is what Tata Motors is up to and how that's been absorbing its monthly sales data. Of course, the most impressive of the lot was M&M tractor sales, and what you heard from Aisha Ari, those were some impressive numbers. Tata Motors is just about quiet right now, and Hyundai as well, wherein their March sales were higher than estimates, led by the SUV segment. Gautam, how do you bifurcate now between the auto plays and the four-wheelers? Let's restrict ourselves to that.
So yeah, auto we have been actually for 3-4 months in a more tepid kind of growth environment, which is fine because four-wheelers have seen a good cycle before that, not a great one but a good one. But within that, we are clearly seeing winners emerging in this cycle, which are very different from what would have happened in a pre-COVID four-wheeler cycle. So we are staying with the winners because it's very clear who the winners are in this cycle, and there have been some changes in that too, the pecking order. But right now, it's pretty clear. Even in two-wheelers, we are seeing something similar happening. Some clear winners have coming out. So while the overall situation in auto is tepid only from a growth perspective, but there are winners within that pack that one needs to be remain invested in, I would believe.
I'll go back to one more important aspect, which is what is happening in the IPO market. And in the month of March, there has been almost like a famine, almost a dry patch of IPOs. And that is something which is very, very crucial for us to, market for our viewers. That look, see, why were markets, where was the supply in the market coming from? See, demand was coming from SIPs, supply was coming from FIs, supply was coming from promoters, and supplies was coming from the IPO route. So three sources of supply have suddenly dried up, which is FIs have been coming back and going, IPOs have dried up, and promoters have stopped selling. So these are technical factors which really would be at play. So Gautam, I go back to that large point again, which is that there were a lot of these narrative themes in the market. Made in India, move out of China to India, made in India for the world, Atmanirbhar Bharat, chemical, EV, e-commerce. Where do you think the storytelling is real, and where do you think the storytelling is still unreal?
That's a very valid question, because actually behind every story, there is a successful company, there's a successful stock. And honestly, our job as fund managers, stock pickers, is to find that one company which is going to really make it big, right? If you think about Make in India, are there winners? Yes, there are winners, but it's not like every company which is talking about Make in India is going to be a winner. So, especially when the tire hits the road in situations where you get a reality check, like what's happening today, which is not a frenzy, you get to know which is the winner, and you have better stick with them because the others can fall through the roof very easily. So that is a lesson that market teaches again and again, and this cycle is no different. So don't completely avoid things, is what I would say, but don't completely buy into them blindly also, because that will result in disasters in terms of stock picking. The core job of finding that those great companies in the early stages is what is the most important thing. And thankfully, because of these things, especially the Make in India manufacturing thing, we had a couple of good companies emerging, be it in discrete manufacturing, electronics, or be it in chemicals. So we, as a country, we should be happy about it. And the market caps have gone up a lot in these companies too. I'd also like to touch upon that point about supply briefly. See, the supply did set a cap on the market, so we should not forget that the supply is not completely price inelastic. It depends on the price that is there available. So supply will again come back if the prices are good. So we should not forget that. I think another large IPO should be in the pipeline sooner than later. That is going to be the construct of the market, especially if the market continues to see a lot of liquidity coming in and remains expensive.
Okay, Gautam, so good to have you on the show. Thanks for your time today.